G'day legends, and welcome back to another video. With just 6 days remaining until the 2-week close, Bitcoin is really sitting on the edge of a cliff, retesting the 50 EMA yet again. The loss of the 50 EMA on the 2-week chart has historically triggered a capitulation event, resulting in the next leg down in the bear market. We are going to be discussing these trigger points in today's video and going over the immediate short-term price action following the aggressive correction from 90,000 during yesterday's daily close. We'll also be taking a look at the 4-hourly chart on the short term, discussing whether or not we are going to see a bounce from here, or if we are going to see a continued correction into the next high time frame support at 74 to 76,000. We'll also be taking a look at, of course, the macro charts from a 2-week perspective and a weekly perspective, as well as reviewing the monthly data and the total cryptocurrency market cap. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into it. So, as we can see, in 6 days from now, we have got the 2-week candle close. And yes, it is still a while away, but it's very important we discuss the significance of this, as we are now retesting yet again that 50 EMA for both Bitcoin on the 2-week chart, but not only the 50 EMA on the 2-week chart for Bitcoin, but also the total cryptocurrency market cap. And this level has historically acted as both a temporary support where we've seen bounces from. We've seen that happen during the last 2 weeks. Again, we saw a bounce up to that $93,000 level, which we know to be the leading span A of the Ichimoku cloud. You can see this green line. We came up and touched that, and since then we have seen the pullback exactly as anticipated, which lined up perfectly with this prior level of support back in December 2024, and of course rejected from just recently at that 90.5 to 92.5k level. But of course, it is also the 50 EMA on the total cryptocurrency market cap. Now, the loss of this level have also triggered an extended pullback or a continuation in the current downtrend on the macro scale. So a lot to discuss in reference to that. Let's start on the market data. So a fair amount of movement over the past 24 hours. I want to actually zoom into the hourly chart and let's take a look at this. We can see here, guys, a lot of price action over the last 24 hours. We saw a weekend of almost nothing, just sideways consolidation. Of course, we had Thanksgiving in America, so with that, we saw a massive reduction in volume. But as soon as that weekly candle closed, we saw this candle print. Now, this was about a 4% correction for Bitcoin in the matter of an hour. And from then, we have seen a little bit of a continuation lower and some downward chop develop. We'll discuss that in just a second. But all in all, we saw some mass volatility come into the market, mass liquidations of liquidation data showing us a 700% surge, sitting just under 1 billion in 24-hour liquidations, and volume up around 127% over the past 24 hours. So again, some mass volatility over that period. Moving over to the DXY, still seeing some rejections here at 100. If we break through 100, we are going to expect a stronger reversal to develop, potentially as high as 104, 105. That would be best case scenario for the DXY, but this would add some downward pressure to the risk asset market, resulting in likely continued pullbacks for the S&P 500 and for Bitcoin. Whereas any sort of rejection from 100 increases the potential for short-term recoveries, those, the short-term recoveries we have seen on the S&P 500, we'll discuss in a second, and we have seen on Bitcoin with that bounce from 80,000 into that $93,000 region. However, if we're taking a look at the DXY on the higher time frame, the macro trajectory is that of we are potentially entering a reversal stage as we have now retested this macro uptrend yet again. This is a trend that we've been above for about 12 years, 11 and a half years now. So a very, very long time. So pay attention to that trend line and pay attention to the 100 level. As we know, we've got numerous economic news events happening this month, from CPI to PPI to personal income and spending to NFP to, of course, the big one, which is going to be the interest rate decision. And we can see here the probabilities are currently in favor of an interest rate drop, and the market has actually priced that in already. So it's going to be interesting to see how that actually reacts and how the market responds to this news. We do know if we see an interest rate pause, the market will very aggressively drop because it is expecting an interest rate drop now. And depending on how the Federal Reserve, I guess, spin the narrative during the interest rate decision and during the press conference following the decision, is going to set the tone for the market movement for the rest of the year. So if they have a bearish outlook during that meeting, we could see more pullbacks, even though we have seen an interest rate drop, because the market moves on perceived systematic risk, not so much the actual risk. So there's a perception of what is likely in future periods that drives the market now more than what is happening, because by the time it's happened, the market has likely already priced it in. So that is something to consider as well. Let's go ahead, guys, and jump into Bitcoin. We have a lot to discuss. Before we do, sign up to BitGet, BitUnix, or BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content on a daily basis, and you'll support yourself in your trading journey. Go ahead and sign up with the links down below. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Alright guys, let's go ahead and get stuck back into it. I want to start by taking a look at the 2-week, and then we'll break it down into the shorter time frames and the macro and the total cryptocurrency market cap. Now, the 2-week, as we mentioned, is closing in 6 days, so still got some time from that. If we take a look at this 2-week, we are more specifically focusing on the 50 EMA, and we are also focusing on the Gaussian channel. These are the two indicators we really care about for the 2-week chart. Now, if we look historically how the price action responded to the 50 EMA and Gaussian channel, we notice that the breakdown of the 50 EMA and Gaussian channel upper band, more specifically the 50 EMA, has really triggered the capitulation phase of the macro downtrend. Essentially, that fast and aggressive move downward, which often results in a larger consolidation or mass liquidation, which pinpoints the bottom. Now, in historical bear markets, we have seen a few variants in how the bottom has been formed. We've seen instances where we've seen mass liquidation events marking immediate bottoms. We've also seen instances like the 2022 cycle where we saw this longer drawn out downward consolidation with decreasing bullish, bearish strength and bullish absorption occurring through multiple months, eventually marking a bottom before we then saw a reversal. Now, the larger the cryptocurrency market cap becomes, the more likely that tops and bottoms actually become drawn out, and we see these periods of exhaustion develop rather than singular wicks into mass liquidations like we saw in 2014 and 2018, etc., etc. So what we are expecting here is similar to what we have seen historically. Now, a lot of people don't believe in the 4-year cycle, and that is totally fine. We're just using the 4-year cycle as a reference to, I guess, segment the different stages of the market. We've seen macro uptrends and we've seen macro downtrends. Regardless of whether or not you believe in the 4-year cycle or not, that is a factual claim. We've seen macro uptrends, we've seen periods of extended macro increases in the price, and we've seen periods of extended macro decreases in the price, regardless of whether or not we categorize that in the 4-year cycle or not. What we can see when we overlay the Ichimoku, the market cipher A, which we have our custom settings on for the 50 EMA, which is the red line, and if we overlay that Gaussian channel, we can notice that when we've broken below the Gaussian channel upper band and that 50 EMA, we have noticed large corrections in the market price for Bitcoin. Moving back to 2014, from that correction point, we saw a drop of 56%. From that breakdown point, we saw a drop of 50%. From that breakdown point in our prior bear market, we saw a drop of 59%, and we run the risk of seeing an equal drop of around 50-ish%, taking us down as a low as around 36,000 worst case scenario if we see that drop. So we do run the risk of around 50% correction for Bitcoin if we lose that 2-week 50 EMA. Now, there is some good news to that. What we have seen historically is that upon the breakdown of the 50 EMA and Gaussian channel upper band, we do see these large corrections, but these large corrections are often the last large correction of the bear market, which then results in either a mass liquidation event to pinpoint the bottom or a longer drawn out consolidation over many, many months with decreasing volume and decreasing bearish strength, often resulting in a bottom and a macro reversal like we saw in the 2022 bear market. Something to consider. Nevertheless, this is going to be a major line in the sand because we're looking at when the next leg down on the macro scale will start. We are watching very closely these 2 points and the fact that we are now retesting that 50 EMA gain. And yes, we have 6 days remaining, but we are retesting it again. We need to talk about its significance. And I think we've done a good job at showing you guys why this point is significant. Looking at the total cryptocurrency market cap over here, we can see again how it has been applicable not only in prior cycles, but in the current cycle. Let's go ahead and get rid of some of these indicators and go to a log chart just to compress the data a little more clearly. And we're just looking at the 50 EMA again here, guys. So we look back at the prior, this is 2018. We saw the loss of the 50 EMA. It acted as a temporary rejection point. And then we saw a major correction from the breakdown of 55%. If we look at 2022, we lost the 50 EMA. We saw a major correction of 51%, so about a 50% correction. Again, the loss of the 50 EMA, we could see a correction of greater than 50% or 50%, which could take us potentially to the 200 moving average. Now, again, if we're looking from how the price action moves from a technical perspective, the retest closer to the 200 moving average would suggest mean reversion has been completed. And that would be a theoretical target for the cryptocurrency market cap. So it is embedded in logic and reason when we're looking at how the market generally moves and how mean reversion generally completes across higher and shorter time frames. So that is another point over here, guys. We've seen the breakdown. The total cryptocurrency market cap as well would be suggestive of continuations lower. Now, all of this is avoidable, of course, if we just maintain above this level. And that is something we need to obviously be very considerate of, because if we look at the prior cycles, the 50 EMA hasn't been a level that immediately breaks. And we don't even need to look at prior cycles. We can just look at what has happened during this uptrend. Even on the total cryptocurrency market cap, the 50 EMA has been a strong level of bull market support through the uptrend. And this is going to be a level of which we've seen major bounces develop from. And there's a level we need to play I guess, attribute a lot more significance to. But nevertheless, guys, we'll move on from that now. That is just something that we need to pay attention to. We obviously talked in yesterday's video about the 1 week chart, and we discussed that the lower band of the Gaussian channel lines up very well with the 50 EMA on the 2 week. It actually lines up just a little bit under it, so meaning we lose a 2 week 50 EMA. we will as well see a breakdown of the Gaussian channel lower band, or you see a breakdown of the weekly Gaussian channel lower band, we will inevitably also have lost the 2-week 50 EMA. So either of those two can act as trigger points. So it would be the 2-week or the 1 week. The breakdown of these levels would act as trigger points for further corrections toward the downside. Now, with that being said, we have also seen that level act as a temporary area of support, something to consider. And we talked about in yesterday's video that the Ichimoku cloud indicator, particularly this thicker green line and lower red line, the leading span A and leading span B, have acted as trigger points and rejection points during prior cycles. We've seen here mass consolidation and rejection from the leading span A, eventually breaking the leading span B, resulting in that extended correction. The leading span B is going to be the bearish trigger point we are watching for as well to see continuations lower. So we've got so many bits of confluence, so many pieces of technical data to tell us exactly when that next major downward move will start. And we also know while we are sitting above these points, there is a chance for bounces and reversals. So the big question is, where do these bounces take us? How high can these bounces go? And will we continue to see bounces, or are we going to see a faster breakdown? So let's tackle those two questions. In terms of bounces, how high can we go? As you guys know already, I was expecting a bounce for Bitcoin. We talked about it many times as one of our thumbnails, one of our videos. We talked about it last week, throughout the whole of last week, because we were expecting a bounce from that 80,000 level into 92.5. We saw that play out perfectly. We then told you we're expecting rejections from here. That has played out perfectly. And we are going to continue to tell you we do not expect the price to push aggressively higher unless we're able to break through this resistance, and it is unlikely we do so, as that is going to be the leading span A level of resistance. It is more likely that we either see a faster breakdown of the trigger points, or we see direct sideways consolidation. The faster breakdown of the trigger points may result in a faster bottom for Bitcoin, which could either result in the 4-year cycle breaking as we reach a bottom earlier, or we see a longer, more drawn out period of sideways macro consolidation and chop, something that no one is really anticipating. That also could be a thing we see. So again, we need to play it level by level. But when we look at the technical data, we can see major trigger points are very close to activating, when if broken will result in these larger moves down. Something to pay attention to. Let's move over to the shorter time frame charts now. So when we're taking a look at the shorter time frame charts, again, it's very, very clear what we need to see for a major reversal to develop. It is abundantly clear. It's almost ridiculously clear. We need to see 2 of the 3 validation points we watch for to be confident in reversals. As you guys already know, strength, structure, trend. Trend, are we in an uptrend? No, we're in a downtrend. Downtrend is represented by this diagonal downtrend, right? This black line. This downtrend has now been going, if we just take a look at the date price analysis over here, from the 6th of October, we've gone 56 days of downward price action, and we've dropped a maximum of 35%. So when we're looking at what a bear market is, now I still get a few comments of people saying, we're not in a bear market. By all definitions, we are in a bear market. Now, me saying we're in a bear market shouldn't invoke fear, shouldn't invoke, people panicking, because there shouldn't be a panic associated word. It is just a definition of a market structure, a market pattern that we're in. A bear market, by definition, is a market environment which favors short selling. So essentially what that translates to is a period of time where the price action is moving in an aggressive or continued downward direction. We have 56 days of downtrend. So that validates that point. And number 2, a correction of 20% or greater from a local top. And we've seen 35% down. So that validates that point. So from a technical definition, we are in a bear market. Now, from a 4-year cycle perspective, this is where I think people get confused or get their opinions altered. Some people don't believe in the 4-year cycle, so they don't see this as the 4-year cycle bear market. A bear market in relation to the 4-year cycle, they just see it as a correction. So if you don't believe in the 4-year cycle, then yes, you may not believe this is the 4-year cycle related bear market, but if we're talking about the technical definitions of the words, then we are technically in a bear market. Now that doesn't necessarily mean we are indefinitely going down forever and going to zero. I think a lot of people expect Bitcoin to go to zero. That's not going to happen either. The bottom will be a lot higher than the majority of people expect, just like the top is a lot lower than the majority of people expect. It's always the case. It doesn't necessarily mean we're going to see continuations lower, but if we're defining the market for what it is, I think we need to be intellectually honest with our definitions, unbiased, unclouded by our personal desires and beliefs. And that is just the reality of the market. When we're talking about reversals and when this downtrend can end, we can also objectively identify these levels very clearly. Strength. Is the momentum positive? No. Is the trend positive? No. In terms of structure, do we have any structural significance or structural levels suggestive of absorption or suggestive of weakening bullish bearish strength? Answer is no. We have been printing lower highs this entire time. So what do we need to see? We need to see 2 of those points break. We need to see the trend break and we need to see a prior lower high broken. If we see that, expect a reversal. Will the reversal break the bear market? I don't think so. I don't expect it to happen. Will we see a great bounce for Bitcoin? Potentially a multi-week uptrend? Yes, we could see that. How high could we go? 108,000 is a very realistic target. If and only if we break through 93.5. Until then, we already know the probabilities are in favor of us not even getting above 93.5k, as that is going to be the leading span, a rejection point we rejected from numerous times in the prior cycle. And of course, if we fail to do that by the time we close the 2-week underneath the 2-week 50 EMA, the probabilities of us actually breaking back above here immediately is very, very low. In fact, the probabilities become much more in favor of us coming back into the 76 to 74,000 range and potentially even lower. We're going to wrap up the video there, guys. Have a fantastic rest of your day. We'll catch you guys on Thursday, the day after tomorrow. See you then. Have a great day. Bye.